All right, hey trader, thank you so much for tuning in to the weekend wrap. It is February 28th, last day of the month. We've got a lot going on this week, quite a bit going on in the news. And last week at the close was Friday was just an absolute trash day, really choppy. We did test below Thursday's low, but we couldn't hold it. And it just really chopped around for the rest of the day after that. But with no further ado, let's get right into it. All right, so in the news this week, inflation fears have really been on the rise, stoking tension that the prices of consumer goods may be up. There is added pressure that the Fed may enforce a more hawkish monetary policy, particularly as bond yields continue to rise. If you didn't see, the bond market was wild last week. Just really went up pretty substantially. So despite that, the January rate of the annual core PCE inflation matched the December 1.5% reading, exceeding economists' projection of 1.4%. So basically what that says, the measurement tool that the Fed uses, it was 1.5% in December, and it was the same in January, 5%. However, it's expected to be at 1.4, so it's holding steady based on their projections, but it is not dropping yet. As per the $15 minimum wage increase, it's not expected to pass the Senate, according to PriceSquawk.com, because that, excuse me, that and there is no backup plan in place. It's just going to have to come back to the floor at some point in the future. Powell's address last week stated that he still feels that it's too soon to talk about raising interest rates. So that does suggest that we have more inflation on the forefront in the near future. Despite that, market activity in the bond market suggests that investors feel that they may not believe it, that a rate hike could be coming in about 2 years. Medium to long-term yields have been surging in price, suggesting a rapid reflation that spurs the Fed to pull back on stimulus. Bond market has started to steady, however, with the 10-year settling near 1.41% from last week's 1.61% high. Most importantly, the House has passed Biden's $1.9 trillion relief package, and it will soon be sent to the Senate floor. In Corona news, virus cases are also down 72% since the January 12th peak, and hospitalizations are closely behind, which is phenomenal news. Also, because of the stimulus news, oil saw a strong resurgence last week as well. And looking forward to seeing what happens with that in the coming week, particularly if stimulus passes through the Senate. Here is the economic calendar for the coming week. So tomorrow, Monday, we have the ISM manufacturing PMI. Tuesday, no major calendar events. Wednesday, we've got the ADP non-farm employment change, as well as the non-manufacturing PMI and crude oil inventories. Thursday, we've got initial jobless, and then Friday, that's the big day in the news. We've got non-farm payrolls, the unemployment rate for the month of February, and the U.S. federal budget. As far as earnings go, on Monday, we have Zoom and Mercado Libre. Tuesday, we have Target. Wednesday and Friday, we have no major earnings, but on Thursday, we have Broadcom and Costco. So here is the Sunday night activity for the S&P futures. This is a 30-minute time frame. So you can see right here, this is Friday's session, and you can see that we tried to break, we did break below Thursday's low, but we were unable to hold. We put in this buying tail and started trading back up inside the range. So we know that balance is likely to continue to hold. Also, we have a buying tail here in the overnight session. This is taken around 7 p.m. Pacific time. This is a market profile. It's similar to a volume profile, but it's time-based, not volume-based. And this is just a split market profile. So on this profile, this is showing all of the time periods kind of combined. And this profile right here is, like I said, the split version of this, and it shows each 30-minute individual time period. So you can kind of visualize these as being like 30-minute candles. So you can see we traded right up to this low volume node right here, and we'll see what happens, but my immediate bias is long. If we do happen to sell off, however, there is really not a lot below us right here. I mean, it's going to be a big drop. Um, the 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 next major support levels below us are a long ways down. So for those that are holding long-term investments, I hope that we can hold this level. I think we will. The false breakout on Friday definitely suggests that, but never know. But this could be the start of a really nice bull trend, just in the area that we're in, and we've got quite a bit of upside potential here. So also looks like we have an unfilled gap. I just noticed this on my chart. So prior to, let's see, it looks like between Wednesday and Thursday, we've got this very small unfilled gap right here. So that would be a nice upside target to fill this gap up to. All right, here's some trade ideas for this coming week for the equities markets. So Gamestop looks like it has a pretty nice short setup. This is a 1 minute time frame. You can see I have this. TradingView has horrible volume profiles unless you want to pay for them, which I certainly don't because I don't trade equities. I'm just doing this for you guys. But I've got this quote-unquote poor man's volume profile right here. So you can see on this 1 minute here, we've got the point of control weighted to the low of the range, suggesting that we have more price acceptance at the low. We've got this nice V-top formation right here and a near 100% retracement. So I am looking for GameStop to take out this support level, and that is right around $100, for it to continue to break through that down to 97.21, followed by 85.30. So we have what I think I meant to write, now that I'm looking back, might have meant to write 87.21 right here because yeah, 97.21 is like below that. I'll have to look back at my charts, but if you just look at the candlestick formations, I'm looking for it to break this support, test this support, see what happens, probably break through. If it does break through, then I'm looking for it to test this pivot high right here, basically right at $70. So that is my bias for GameStop. If you're still trying to get long in this thing, man, I honestly feel kind of bad for you because you're probably wanting to pull your hair out right now. I mean, yeah, this is a decent spike right here, but I just really don't see it happening. I don't think, this massive spike, the Wall Street bet stuff, it's gone, man. Like the whole reason why it worked is because everybody was a united front. That front is no longer united, and the people that are still playing it are gonna be the people getting played. So yeah, might want to go short if you're gonna stop. All right, we got Neo right here. Very nice ascending triangle. Again, this is a 1 minute chart. Coming close on Friday. So again, the point of control is weighted up here at the top of the range on Friday. So I'm looking for a break through the top of this ascending triangle. Note this is a week high. We've tested this thing like 3 times. I'm looking for a break below above here, for us to test this level up here at 47.77. And this upside target right here at looks like 48.44. I did measure this ascending triangle right here, so you can basically measure this and use that to project, estimate what your upside target should be, and that put us right at $50. So I wouldn't be surprised if that played out exactly right to the T, right to $50. I think that would be a phenomenal trade. Last but not least, we got JNUG. If you haven't been watching, the gold market has been pretty bad lately. And we got a bear flag right here. This is a 5 minute time frame. And the next downside target, I couldn't even fit it on this screen because it was so far back. So basically, the chart I was using was a 2 hour. You can see there's a pivot low there. Sorry, I don't have a screenshot of it. But basically, I'm looking for this break below $80, and my downside target would be $71, followed by $61.80. So just reiterate, for the S&P, my immediate bias is a neutral long. I will be moving forward with caution because it only takes one really big trader to come in and drive the market through the floor. Actually, that really kind of screwed on it's Thursday. Oh, excuse me. Go back really fast because okay. So, yeah, this was what happened. Okay, so if you look right here, on Wednesday, our price activity was bullish. The point of control was weighted at the top of the range. And then the overnight session was also looking bullish. However, if you look at a volume profile, and this is where it gets interesting, where you start comparing market versus volume profile, the point of control for the overnight session for the point of control for the overnight session here for this evening was actually weighted at the bottom of the range on the volume profile right before the open. So basically, when I came in at like 5:30 Pacific, the POC was up here. By the time we opened, it was down here, and I didn't switch my bias. That's what really got me. So, although Wednesday was long, and usually the regular trading hours activity is the stronger activity, I didn't give enough weight to the fact that the point of control shifted down in the overnight session, and that's when we got this fat sell-off. Um, hope I'm thinking of the right days here, where this matches up with kind of what I remember. Anyways, so yeah, case in point, I always a lot can happen in the overnight, and I don't think a lot of people take the overnight all that seriously, and they give a lot more weight to the regular trading hours. But I'm really starting to understand that the overnight can have a pretty substantial impact on what happens at the open. So I'm definitely going to start giving it more weight in my future analysis. So anyways, like I said, immediate bias is neutral long for the S&P. I'll be moving forward with caution and watching for a potential sell-off, although I expect that we're probably going to hold considering the false breakout on Friday's session. The major catalysts for this week include the inflationary pressure, but most importantly, whether the $1.9 trillion relief package passes the Senate. Note that Friday is a very big news day with non-farm payrolls reporting as well as the U.S. federal budget report. But that's all I've got for you guys. Thanks so much for tuning in. By the way, sorry I didn't get back to you guys last week. I was having computer issues. I had to do a total wipe on my machine and reinstall Windows, which was lovely. So, anyways, that's all I got for you guys. Again, thanks so much for tuning in, and appreciate you as always. And I look forward to seeing you guys for the morning brief. I don't know if I'll be on tomorrow, but I should be on Tuesday, definitely. So again, thanks so much, guys, and wish you the best. Trade smart this week.